Hey y'all, Zach McDonald, your real estate agent with Real Property Associates, and mortgage interest rates hit an all-time low again this week, and we're gonna talk about what that means for you coming up. So weekly mortgage rates hit an all-time low again here for the third time in 2020, and we're gonna go through this survey that Freddie Mac does every single week following the mortgage rates, and then we're gonna talk a little bit about the applications here and what it means for you. Now, first off, Freddie Mac has said here in their press release that mortgage rates have now hit the lowest level in their survey's nearly 50-year history, breaking the record for the third time in just a few months. These unprecedented rates have certainly made an impact as purchase demand rebounded from a 35% year-over-year decline in mid-April to an 8% increase as of last week. A remarkable turnaround given the sharp contraction in economic activity. Additionally, refinance activity remains elevated, and low mortgage rates have been accompanied by a $70,000 decline in the average loan size of refinance borrowers this year. This means a broader base of borrowers are taking advantage of the record low rate environment, which will benefit the economy. Now, let's look at the rates here really quick. So they do this survey every week of mortgage rates across the country, and the 30-year fixed rate mortgage was 3.15%, and this data is as of 5/28, and this rate was purchased with 0.8% in fees and points, so you have to pay to get this rate in some places. 15-year fixed rate mortgage as of 5/28 on their survey, 2.62% with 0.7% in fees. And then the 5/1 arm was 3.13% with 0.4 points in fees. So just interesting looking at this survey here. Rates, the 30-year fixed rate is down 0.84% from the year before. So last year, the same time, the 30-year fixed rate mortgage was at 3.99% on their survey. So we're seeing rates substantially lower than they were at the same time last year, which were already good rates. And again here now the new record in 2020. So there are multiple opportunities here that I see, and I want to share a few of those with you. First opportunity is to refinance your mortgage and lower your monthly payment. So many people have already jumped on the refinance bandwagon this year. As we've talked about 2 times already this year, we've seen record low interest rates. If you're in that situation where maybe you still have a little bit higher interest rate and you didn't jump on it at one of the earlier points this year, there's another opportunity here right now, and it could go a little lower maybe, but this would be the time where to at least get an application in, start thinking about it, because if you get yourself in the queue, you can lock your rate at the opportune time. If you're not in process, it takes time to get yourself into the position to be able to lock. And since rates fluctuate every single day, we could see rates jump to 3.5% tomorrow. We don't really know what's going to happen on a daily basis. But if you can get yourself set up for success and in line for locking your rate, then you'd be able to capitalize and jump on one of these really low rates. Now again, this could change even by the time this video gets out. Rates could be up. But right now, as of the 28th of May, we've got really low rates again. So a great opportunity to refinance and save some money. But again, if you're not planning to live in the house for at least a year, it probably doesn't make sense to refinance. And if you're not going to be saving very much on that monthly payment, it also probably doesn't make sense because it does cost a little bit of money to go through that refinance process. So again, it would depend on your individual situation. And that would be a great opportunity to speak with a loan officer, and I can make that connection too. So if you're watching this and you don't know who to talk to about mortgages, I'm not the one to talk to about mortgages, but I can connect you with some of the best here in the area. So let me know in the comments or shoot me a message and let me know if that's something that you're interested in. Now, the other option here, so the first one was getting your refinance done and lowering your monthly payment. The second option would be as if you're thinking that you would move here in the near future. With rates being at an all-time low, it also means that you have increased purchasing power. So you can essentially get a larger house or a little bit more expensive house and have the same payment. So if you're somebody who's been thinking about maybe buying another house, but maybe that house you really wanted was outside of what your reach was with lower rates. Now your reach is a little bit farther and it's not going to impact your payment at all. The money's cheap right now. So it's an opportunity to maybe buy that bigger house, or during the COVID-19 crisis, if you've been working from home, maybe you've reprioritized what's important and you want to make a shift. This could be a great opportunity to buy something that is bigger and or just different and more suitable for what your needs are, and then also be able to sell that other property. So in this situation, be able to lock in a lower rate on that new house, reach a little bit further for the same monthly payment, but then you can take that other property and sell it. And thankfully right now, homes are still selling relatively quickly. And the big reason that that's the case is because inventory is so low, and you also have these really low interest rates. So people are still out there buying and selling, and I'm seeing that even as of now. I have a client that's got an offer in. So lots of activity, multiple offers on a lot of homes, not every home, but the good ones are going really quickly still. Opportunity number 3 would be to purchase your first home and actually get yourself into the market for the first time. Now, with record low interest rates, the same thing applies to opportunity number 2. You have a lot of additional purchasing power right now than you did last year. We're talking almost an entire percentage point down on average from the rates that we were looking at last year. And in 2018, we were seeing rates that were another percentage point above that. So last year, it was the same message. Man, we're like down an entire percentage point. This is awesome. And now we're having that same conversation. So imagine if you had a 5.5% interest rate instead of a 3% interest rate. The amount of additional money it takes every month to make that payment is substantially larger. So with the lower interest rates, as a first-time home buyer, you have the opportunity to jump into the market and get a house with a lot lower payment. Now, some would say, well, what happens if the market goes down? And I don't have a crystal ball, and I don't want to be the one on the camera saying, oh, the housing market's never going to go down, because it does. The housing market does not just go in a straight upward trajectory, unfortunately. It does do that, and it did do that for a while here in Seattle, but we've seen some bumps in Seattle recently. 2018, we saw a pretty massive dip. And we've seen a steady increase in the market. And in my last market update, we did see prices pretty much returning to where they were at the top of the market in 2018. So we're kind of back to that same spot that we were a couple years back. But there are some ups and downs in the market. So it makes sense that if you're going to buy a place, you want to live in that place for a little while. The good news is that the housing market does trend in an upward direction in the long run. Historically, that's what we've seen. And again, past performance is not necessarily indicative of future performance, but if we look at a really long time horizon, chances are you're going to be in a good investment. So for example, if you bought a house that was $750,000 in Seattle, which is right around the median, maybe a little bit below that, you're going to be getting in right now, according to this survey, with about a 3.15 to 3.25 rate, right? Depending on your situation, and each person's situation is different. So these rates vary depending on your down payment amount, your credit history, and your job history, income, assets, things like that. So there are some variables for each person's situation, but let's just suppose you can get in with that kind of a rate. If mortgage rates did go up, which a lot are predicting that this isn't going to be able to go on forever. If rates do go up after the election maybe or something like that, now maybe you're looking at a 5% interest rate again, that same amount of money that you're able to borrow. Today's money, right? Today's money is worth more before inflation than tomorrow's money is going to be. So if you're able to get a house, maybe it does go down in value a little bit and before it jumps back up. If you jump in now with the lower interest rate, you're actually going to be coming out ahead than where you would be looking at it down the road. So maybe that $750,000 house in a year or two is worth $725,000 or $700,000. If your interest rate's at 5%, you're going to be paying a lot more money every month to have that $700,000 house than you'd be paying to have the $750,000 house. And as long as you write it out a little bit, the worst recession we had in recent memory lasted 4 years, and then home prices here in Seattle were actually above where they were at before. If you can just write it out, you're now in a really good situation, and you have a house that's back at where it was in value, but you also have that lower monthly payment, haven't spent as much money to have that house. So I know it's a reverse way to look at it. And again, we don't know. Maybe the market does keep going up, and you never even bump into that situation in the near future, but it's possible that the market goes down here and you face that situation. So I wanted to just at least put that into your mind so you can think about that and consider that for yourself as well. All right, so we talked about 3 different benefits of the low interest rates right now. The first one was that opportunity to refinance, lock in a lower rate. The second opportunity we talked about was that opportunity to maybe buy a new house and lock in a really good rate with increased purchasing power, and then sell the other house. And then that third option was to get into the market in the first place, maybe for the first time. So if you want to talk a little bit more about your individual situation and how this might apply to you, I'd love to be a resource for you. Feel free to comment below with questions or reach out to me directly. I'm happy to be a resource for you.